Anyway, that's nice to hear from you. Tell us about this new thing you're doing.
Oh, the Daily Coin.
Yeah.
I launched that back at the end of April, on April the 27th to be exact, and it is an adventure that just was born out of all the work that I've been doing with Sean and in relation with Sean over at SGT Report. I'm very grateful to Sean for having me, for providing me with the platform and the forum, really, to be able to grow and expand. He and I are, I mean, we're very close. We're very close in our, not only in our relationship, but in the way that we think and the way that we want to present news and present information to people. And in the interviews, I can I only get an opportunity to ask one or two questions, and I have a lot more.
Yeah. No, absolutely. No, I can understand that.
So,
Oh, good.
but
Oh, that's great.
yeah. So that's really where it came from. I'd like to welcome everybody to the Daily Coin, and I have a gentleman, a true professional, and one of the best analysts anywhere in the world. You know his work through financeandeconomics.org and goldmoney.com. How are you, Mr. Macleod, on this, the eve of the Silver Fix transformation?
I'm very well, Rory, and thank you for such a wonderful introduction. I just have to live up to it.
I'm sure you will. And according to the doc and Eric Dubin, I don't know if you saw this over at Silver Doctors yesterday. We're recording this on Thursday, August the 14th, and it's about 9:30 Central Time, and it's, I believe, about 3:30 p.m. In London. Is that right?
That is correct.
Okay.
And the date is important because, as you said in your introduction, it is the eve of the new silver fix.
Yes. And according to the doc and Eric Dubin over at Silver Doctors, SD bullion has absolutely exploded this week with the silver fix ending, and the silver fix ends tomorrow. And what impact is this going to have on Monday, August the 18th, on the market? What do you see happening?
Well, I don't think there's going to be an immediate impact. I was thinking about this earlier, and I put myself in the shoes of a hedge fund manager. Now, at the moment, if you're running a hedge fund, you look at the precious metals markets, you see they're rigged, and you think, I can't control the odds of getting it right if I'm going to punt in this market, so I won't get involved. Now with silver, you're going to have the silver fix process actually in the open. And I think you could watch it for a couple of weeks and see what the flows are like, the size of the orders and all that stuff, and just get a bit of a feel for it. And then because you've got more information, you may be prepared to play in the market. So I think that it's a good thing for the silver market. I think it's going to bring business into the silver market. I don't think it's perfect, by the way, but that's a slightly different story. But I think just making the market more transparent is going to be good for the silver market. I think both in terms of volume, and I suspect also in terms of price, because quite naturally when people get interested in a market, they tend to be interested as buyers rather than sellers.
Okay. So you foresee it being more transparent, the market, more along the lines of the Shanghai Gold Exchange?
Well, I think that's probably going a bit too far, Rory. But I think that the point is that the fix process, which is only once a day, is going to be more transparent. And we'll be able to watch and see what goes on. At the moment, there's nothing transparent at all. In London, it's an over-the-counter market. Nobody knows what the hell goes on. And when it comes to the fix, you have two or three guys get together and they arrange a price between them, meant to be on the basis of their own orders and the orders of their customers. Fine, but it's not transparent. We can't see what goes on. And also it's a fixing process whereby people can put in a bid and then they can withdraw it, and they can put it in and they can withdraw it. They can change the price, put in another bid and withdraw that. So, there's a lot of sort of messing around which can go on. And there's a lot of, if you like, gaming the system, which can go on, which of course is how Barclays got caught in the gold fix.
Yes. And these two or three people that are hanging out determining the fixed price, the rigged price, they have the opportunity to front run it to, or provide that information to some of their friends, if you will.
Yeah,
I'm not saying that
and
they do, but there's that possibility.
yes, I'm with you entirely. I think that the point about the importance of having a transparent market is that then there can be absolutely no doubt that the market is true and fair. I mean, if someone's big enough to push a price around, I mean, that's what the market is about.
Yes.
That's not what we're talking about. What we're talking about is a market which is so opaque we can't actually see what the hell is going on, and that is very, very bad. That leads to mispricing. And as a very old-fashioned stockbroker, the whole of the way the stock exchange used to work in London was it was all about ensuring a fair price, and you can only do that with information. You can't do it by cutting people out of the deal and only showing them what you want to show them, which is broadly how the market works at the moment.
Yes, and it's unfortunate, but hopefully, come starting tomorrow and more so on Monday, we'll start to see those changes coming into effect.
Yeah, the two elements of this. I mean, I think it is going to take a little time. I mean, people are going to watch this. We've got 6 months, I think, of being able to watch it without having to pay for the privilege, which I think is ridiculous. I think this should be free, actually, for everybody to see. But anyway, that's a slightly different thing. But the other thing, I was just looking at the way open interest on COMEX has been tracking with the price. And interestingly, they've been trying to push the price of silver down. But you know what? The amount of open interest has expanded and expanded. That to me is a very clear signal that the swaps are going short again, and they're getting no traction at all. I think the next squeeze is going to be on the swaps, and it could be quite dramatic. So in a sense, if the price of silver is up $1 on Monday, I don't think it'll be because of the new fix. I think it will be because of things that are already happening, if you like, particularly on COMEX.
How is this going to impact things like the open expiry date, as far as, that's been a jumping off point for the bullion banks to come in and do their manipulation and set things up to where it benefits them, these price riggers. And do you think that that's going to be impacted at all?
Yes, I think it will. I mean, the cynic in me suggests that they'll have to rig it before the fix. but
have to fix the fix.
But actually, I think the point is, to be serious for a moment, I think the point is that it's going to be harder for these guys to try and fix the market or rig the market, and that's really the outcome we want. And if these guys don't rig the market at the moment, then for goodness sake, let us see it in a transparent fashion.
Yes.
Then we can't accuse them of rigging it.
Right. Exactly. Just show me what's going on.
Exactly.
And
I mean, the history of this, Rory, goes back to something which we in London called Big Bang, and that was when the whole of the current regulatory regime was founded. Before 1983, the stock exchange basically regulated itself. Around about 1985, the financial security, what's it called? I think it was called it's the SFA or FSA. Anyway, the new government regulator was put into place. And the first thing that they had to decide was what is a regulated investment and what is not regulated. And metals and commodities were excluded from investment regulation. And that is why the London bullion market developed really from the 1980s as an unregulated over-the-counter market. And of course, I mean, there is a slight confusion in this because derivatives and mining shares and all the rest of it, which are primarily influenced by the bullion market, are themselves regulated. Now, if you regulate a future, okay, I think that makes some sense. But then why don't you regulate a forward? I mean, a forward settlement deal is does exactly the same thing as a future, but it's not regulated. So you've got these anomalies which really do need sorting out. And I think what we're seeing with the silver fix breaking down, and the London fix is going to have to change as well, by the way, I think we're seeing the beginning of a process of regularizing the situation that was set up back in the mid-1980s.
Okay.
Otherwise, unless London addresses this, we're going to lose our position in these markets. It's as simple as that.
Well, do you think that BaFin is going to be able to come in and kind of strong arm them a little bit more?
No, I don't think that. I think if you look at going back to gold just for a moment, if you look at the gold market, the big volumes are now in China, big physical
Yes.
volumes. Now we may turn over a hell of a lot more than Shanghai. I mean, the turnover figures for London are just absolutely unbelievable. Which is fine, but actual deliveries, it's China. And
Right.
not only is China keeping all her own production, she's also keeping all the production which she herself processes. And she's got contracts for doré going out to Africa, to Australia, Mongolia, and all the rest of it. And so quite a lot of the world's production suddenly isn't going through London at all. And this is a very, very major change in the market, which has really only occurred over the last 2 or 3 years. And if you look at Dubai,
Yes.
reckons that their turnover, because they're very keen to build on their market. I sometimes wonder if they'll succeed. I don't think they personally will, because they haven't really been that successful in the past. But if they do manage, I mean, they're planning to have deliveries of up to 2,500 tons of gold through that market
Jeez.
every year. That's the sort of their stated ambition. Now, there is the gold around them, of course, because if you think back to the 1970s, when the oil price took off, it was from that moment that the Arabs really began to aggressively buy gold. And so there are, I don't know, I would think there's something round about 40 to 50,000 tons of gold, physical gold, either in the region or owned by people who live in the region. And that, if you like, is the nucleus of a very, very good market.
Yes.
There's also Calotti, the refiners. They're building a refining capacity there, which is double the size of any of the Swiss refiners.
Oh my.
I mean, they're looking at 1,400 tons a year. I mean, this is so.
Wow.
This market is getting ramped up away from London in terms of capability, and London better damn well watch out.
Yes, they sure better. And I've asked you this before, and I've asked many people, because you just threw out some pretty big tonnage numbers just for Dubai. Where is all this gold going to come from? I mean, we already know that China's keeping theirs, Russia's keeping all of their production. There's declining production everywhere else in the world, excuse me, in particular in South Africa, because of the strikes and the fact that there's just not hardly any gold left in the ground. And so, I mean, how are these markets going to be able to acquire all of this tonnage of gold that you're referring to?
Well, I think that, I mean, basically, the answer to your question is that there are two elements to the market. You've got the new stuff coming in. You've also got scrap, which gets refined, and that's another, I don't know, depends on the year, depends on the price, anything between 1,000 and 1,500 tons a year on top of mine production, which is currently running at, say, about 3,000 tons. And then, of course, you've got the above ground stocks of gold, some of which is in LBMA 400 ounce bars. Now, that's another standard which may indeed have to change, because with the Chinese are now are now beginning to dominate things in certainly in Asia. With 1 kilo 4 nines bars. And not only that, but, speaking to our Swiss refiners, I understand from them that the Arabs are sending them 400 ounce bars and getting them to recast them into 1 kilo bars to the Chinese standard. This gold is then being returned to the owners in the Middle East. So, they're not selling it, but basically, I think this is a pretty good signal that that's where they see the market in the future to be.
Well,
And I think the other thing is, I'm not too sure, but I think Dubai is working on a 1 kilo standard. But I think because they're on the crossroads to India, they see, I think, 995 perhaps. That was the last I had anyway, that they're looking at a 995 standard 1 kilo bar rather than the 4 nines.
okay, and let's change gears a little bit here. And is there a simple flight from the dollar right now with China and Russia signing these huge contracts that are not finalized in dollars. And how is this, or why is this not impacting gold and silver? I mean, with China and Russia signing these huge contracts, in particular with Gazprom, through Gazprom, what's happening there? What's going on with this?
I'm going to rather cheekily take sort of the, if you like, towards the end, what you're saying, why isn't gold and silver rising? I think the answer to that is if these markets weren't so opaque, I could give you an answer. But more seriously, the history of the whole of this sort of Asian move away from the dollar, if you like, as a settlement currency for cross-border trade, has its roots in the Shanghai Cooperation Organization, which was set up principally between Russia and China back in 2002. The other members are basically the various states in between. I mean, there's Uzbekistan and Kyrgyzstan and Kazakhstan and, all that lot. Yes. But there was a very interesting announcement literally 2 weeks ago, and that is that there are four. Oh, are you still with me?
You cut out there for a minute.
So yeah, I cut off. Sorry. These are known as dialogue partners at the moment, and they are India, Pakistan, and Iran and Mongolia. Now, as of September, they are joining as full members of the SCO. Now, the Shanghai Cooperation Organization at that point will have amongst its members half the world's population.
Oh, man.
Now, this is a major development which has been completely missed by us in the West. The importance of this is that eventually the Shanghai Cooperation Organization will be the most powerful economic bloc we have ever seen, and it'll stretch broadly across Genghis Khan's old empire, from the Bering Straits in the east to the gates of Jerusalem in the west. And I kid you not.
Man.
Not only that, but the Chinese have been tying up special deals with Saudi Arabia and other Gulf states for energy. You have got energy deals coming out of Russia. The whole thing is going to be an enormous self-sufficient economic bloc. And this is happening before our very eyes. We think that the move recently by Russia to announce a gas deal supplying gas to China was something that came out of the Ukrainian situation. This has been planned for a long time before. It was going to happen anyway. I think Ukraine might have influenced the timing. But there is no doubt at all that for this bloc to work, one of their strategic objectives is to ensure they have a settlement medium which is independent of America. In other words, they will take other currencies, but what they don't want to have is trade reflected in the books of the banks in New York.
And I don't blame them.
And that's, because it is, as far as they're concerned, it is a security issue.
Yes.
That's one of the points behind the SCO. They are there to enhance the security of the members. And the way I'm afraid that America has been playing this, and we're complicit in this in the UK as well, has actually driven on the process perhaps more rapidly than it would have otherwise occurred.
Oh,
so the Ukraine is just it's just part of a far, far bigger picture.
Yes. I want to stay with this for just a minute. And with the BRICS continuing, the 5 BRICS nations continuing to move away from the dollar, and it appears they will be doing exactly that with the implementation of the BRICS Development Bank. Who is going to be using the dollar other than the US, the UK, the EU, and Japan, which in all of these economies, as you are well aware, Alasdair, are all imploding due to their use of the dollar. And is the dollar becoming an island, or is it already an island?
Well, I think we have to draw a distinction between the use of the dollar for trade purposes and the use of the dollar, if you like, as a currency standard. The reason I separate out the two is think in terms of gold. Before the Nixon shock, we were all on a gold standard of some sort. Okay, it's pretty weak towards the end. It was a very strong gold standard before 1933.
Yes.
It sort of, it got corrupted and so on. And it finally finished in 1971 with the Nixon shock. Now, from that moment, in effect, the whole world was no longer on a gold standard through the dollar, but it was on a dollar standard. Now, admittedly, it is a more flexible standard because we have floating exchange rates, whereas under the old Bretton Woods system, we had fixed exchange rates. But this means that what you have to do conceptually is to think not just in terms of, the dollar, but you've got to think about all the other currencies which are in a pyramid, an inverse pyramid, based on top of the dollar. And I calculate that if you take into account broad money supply around the world and shadow banking, as disclosed in the most recent Financial Stability Board report, the world's total broad money supply is around about $168 trillion equivalent. Now, all that is in effect based on the Fed's monetary base of 4.5 trillion or thereabouts.
Wow.
So you can see that the gearing in this is absolutely enormous. Now, if you start disrupting the relationship between some currencies and the dollar upon which they are which is the standard behind them, then you have got, if you like, the potential for some quite violent stuff.
Yes.
The violence on the dollar is actually likely to come, I would have thought, from other areas. I mean, for example, if you get a rise in interest rates, that's likely to bankrupt the banks. A 10% fall in bond prices, in sovereign debt bond prices, could wipe out some very large and significant banks. If that happened, we would have a huge, great banking crisis. And guess what? The Fed would have to print as much money as it possibly could in order to rescue the situation. That's what it would take. The other possibility is the one that you mentioned, and that is if you look at the Western economies, we can see that Japan is in a slump. Europe is pretty well, apart from Germany, in a slump. The UK is sort of okay, I suppose. America is sort of teetering on the edge, and I personally think that it is actually going to disappear, go into a slump itself. Now, under those circumstances, what happens? You have got 40 times gearing on the Fed's monetary base if you look at the currencies all around the world. That 40 times gearing means you don't need to have very much of a slump in order to create another banking crisis, a la 1933. I mean, that was the reason, really, that Roosevelt did it in 33, 34. He had to stop people having the facility to cash in their gold, because at that time there was, I think it was about 11 times geared. If you looked at broad money, M3, it was 11 times the value of the gold held by the Federal Reserve, or actually more correctly, the Treasury. So, this time it's 40 times. Now, admittedly, it's a more flexible dollar standard rather than the less flexible gold standard. But nonetheless, 40 times, you're not going to have very much of a slump in order to create a real currency crisis. So at the moment, we're walking on a tightrope between rising interest rates, which are likely to bankrupt banks who have got too much very, very expensive sovereign debt on their books, or a slump on the other side, which will wipe out their balance sheets anyway. How long can we walk on this tightrope? And then we ask ourselves the question, what's going to happen when the Chinese and the Russians and everybody else decide they're not going to use the dollar anymore? Now, I don't think they can get away from the dollar standard, but you can see that people are going to start sort of thinking about, what is the dollar really worth? And I think just asking the question is not a very good thing to do. So I'm very apprehensive about what's likely to happen on the currency front, and I think that's really where the big systemic risk is now. It's no longer in the banks as such. I think it's been proved that the banks will always be rescued. The one tool which the central banks use is the production of money, and that's what we're likely to see.
Well, and that's unfortunate for all of us that that's the
Well, I'm
one
afraid so.
tool that
Yeah.
they have. You
Yes.
know, we'll just destroy everything to save ourselves.
Well, its history repeats itself. I mean, no paper currency has ever survived forever. They all have a finite life. The trouble is, at the time, you don't know how finite.
That's yes, that's the 40 times leverage question.
Yes, exactly.
And recently, I spoke. I don't know if you're familiar with Dave Cransler or not, but he's another analyst and one that I hold in high regard. And I spoke with him recently. Well, it was about 6 weeks ago, and he was saying that China was paying somewhere around $2,500 an ounce just to mine gold, just to get it out of the ground and get it to the surface. And let's presume that that's true, Alistair, and not argue the point. And why would China continue to tolerate the price manipulation if their costs are that high? Why would they? Why do they
Well,
sit idly by?
I think the answer actually is quite simple. They're mining their gold. They're adding to their gold reserves. Well, it's not monetary reserves. It's non-monetary gold at the moment. It only becomes monetary once they declare it, if you like, as part of their monetary reserves. But the reason they're doing this is for geostrategic reasons and positioning. They want to acquire as much gold as they possibly can. We can only speculate as to why they think this. My personal view is that they have got a very good handle on the mess that the West has made of its gold reserves, and they know that ultimately, by owning gold, they will have power over the West. And the more we sell our gold down at a cheap price, and the more China buys it, the more that's going to turn out to be the biggest wealth transfer we've ever seen in history from west to east, and that's basically what's going on. Now, if you stand back from the sort of it costs $2,500, and by the way, I think that's quite likely because the Chinese gold mining industry is pretty fragmented. I mean, they've got lots of small mines and so on. You can't get the economies of scale from open cast mining and that sort of stuff that we're used to nowadays. They are small mines, but if you can see that at the end of the day, the price of gold is going to be many multiples of where it is, then do you really care if a state mine has to spend $2,500 an ounce getting it out of the ground? No, not really. No. I think so. I think in the if you like, if you look at it from that point of view, then it begins to make sense. And I really do see that China is acquiring gold for geostrategic reasons. And the other thing that's interesting is that unlike Western governments in that position, she has also encouraged her own citizens to buy gold.
Yes.
And that I think is very important. And it does actually make sense. It also makes sense from the point of view that it means that she has, if they invest in gold, then that in effect reduces the trade deficit in the sense that China doesn't end up with a whole load of dollars, with which there's nothing she can do. Instead, her citizens have got some gold, she's got less dollars, and she therefore has less of a problem.
Yes. Go ahead.
It's the reverse of the Indian situation. The Indians wanted to stop their people importing gold because they were saying, well, the reason that we've got a trade deficit is because everybody's buying gold. Now, in the books, I mean, if you're in strict accounting terms, what they say is correct, but actually, it's completely wrong.
Yes, it's the exact opposite.
Yeah, exactly.
And I think that what you said just a moment ago about it being important that the Chinese government is encouraging their citizens to own gold, I couldn't agree more with that. And I think that part of the reason that they're doing that is because they understand that having a wealthy citizenship means that you have a wealthy country. And everyone knows that the Chinese government is corrupt, and they're just as corrupt as every other government around the world, but at least they have enough foresight to at least allow some of their citizens to have to be part of the solution as far as staying away from or avoiding the mess that's coming down the road. I mean, or am I just completely crazy with that?
No, no, you're not crazy at all. But I think I can add to what you're saying because, of course, in China they don't have a welfare system, but they do have everybody saves to look after their own, retirement, family, whatever. And in that sense, it does make a lot of sense to encourage people to buy gold with money that they would otherwise put into yet more property or whatever it might be. So to encourage your citizens to diversify their portfolios does actually make a lot of sense. And I think there's another point which nobody really sort of mentions, but I think could be important in the long run. China is a very diverse country with something like 42 different ethnic groupings. Now, there is the potential in that for conflict. I mean, we've seen, sort of Muslim Chinese, the Uyghurs, getting into trouble and, allegedly planting bombs or setting fires off in other parts of the country. And, you've got a lot of potential for ethnic strife. If people own gold, they are less likely to run out and start burning down someone else's property. It may be a cynical observation, but I think broadly speaking, it is probably true.
No, I would have to agree with you, because if you've got even just a small amount of gold, in your heart of hearts that you've got some wealth. Not just some money, but you actually have some real wealth.
Tangible wealth.
Exactly. And that nobody can take it away from you unless they come and actually steal it from you from your possession.
Yeah. Which
is highly unlikely. I mean,
well, you avoid that by basically keeping your head down. So this is what leads me to this sort of rather, at first cut, rather bizarre thought that collecting gold is probably one of the better ways to ensure that people remain peaceful.
It's actually, I like that a lot, and it actually makes a whole lot of sense. Because, well, once again, if you've got a little piece of wealth, no matter how large or small, then you feel a lot more secure, and you feel a lot better about yourself, which means that your likelihood of coveting your neighbor's possessions is diminished.
Absolutely.
So, and with that, Alasdair, I don't really want to. I could speak with you for days, and I'm not even joking. But I don't want to take up any more of your time. I know that the markets are winding down, and they're over there, and they're just getting started over here. And I know you're either wrapping up this week's analysis or getting started on it one. And I don't want to interrupt that, because I'll be looking forward to it coming out tomorrow.
Well, that's very kind.
Well, I look forward every Friday.
Indeed.
And
all right,
and we can find that over at goldmoney.com and financeandeconomics.org. Is that right?
That is correct. Those two websites will I publish on both those.
Okay. And is there anything that you would like to leave the audience with today?
Anything in particular? I'm just, well, I mean, we've got the silver fix, so that's going to be interesting, and I think watch that and see how transparent the market becomes. It won't be completely transparent because everybody will still be over the counter market and so on, but at least an important part of the process will be brought into the light. So I think that's going to be good. And the other thing is watch the open interest, and if open interest starts picking up in both gold and silver, then I think that we'll be looking at a pretty good squeeze on the swaps. And the swaps basically are the smaller non-US bullion banks.
Okay. Well, then keep an eye out on the new silver fix and watch the open interest there, folks. And Alasdair, I certainly appreciate it. I appreciate all your time this morning, and for the afternoon. And I hope that we can do this again in the not too distant future.
That would be my pleasure, Rory.
And have a wonderful afternoon, Alasdair.
Good. Okay, thanks. Take care.
All right.
Yeah, bye.